Investors worried about market volatility have been flooding funds into a low-risk, high-interest option. What you need to know about U.S. Series I savings bonds. This week's fastest 4 minutes in finance. Hello again, I'm Scott Inman. There have been few places to hide for investors in 2022. Markets are down 10 to 20%. Bonds have been hit hard too in a rapidly rising interest rate environment. In this unusual investment environment, sales of U.S. Series I savings bonds are up 950% compared to a year ago. What makes these Treasury Department offerings attractive is that the interest rate is tied to the inflation rate. And as you know, inflation is running historically hot. That's pushed the current rate to 9.62%. If that sounds attractive, which it is, we've got a few things you should know first before buying. The interest rate on I bonds is made up of a fixed rate and a variable rate. The variable rate is set twice a year and is tied to the Consumer Price Index, which is one of the key measures of inflation. The Treasury Department sets the variable rate on the first business day in May and November. So the rate you get as an investor is destined to change every 6 months. So when the inflation rate goes back down, the 9.62% interest rate will of course fall. Now, it may not fall significantly for some time, so the interest rate may continue to be attractive for a while. And certainly, it beats what you can get from your bank savings account. But you may not be able to access it quite like you can your savings account. You have to hold the bonds for at least a year, and if you cash out in less than 5, you could lose 3 months of interest. Another challenge to the I bond is it can be terribly difficult to purchase them, and you're limited on the amount you can purchase. U.S. citizens, residents, and government employees can purchase up to $10,000 in I bonds per calendar year. The bonds can also be purchased for spouses and children, and if you use your federal income tax refund to buy one, you can get an additional $5,000 in paper form. Well, the bond buying and selling process can be terribly time-consuming. You can make transactions online through the Treasury website, but it can be difficult to navigate. Information for this video was obtained from Bloomberg News, and in an article, one advisor reports that a few clients have had such difficulty navigating the website, they wound up filling out a paper form and signing it at a financial institution with a signature guaranteed seal or stamp. That, of course, added weeks to the buying process. And I've had a client who is trying to liquidate I bonds that banks have told them they won't redeem them anymore, and she has to send in the bond to the Treasury Department and wait. Bottom line, the I bonds have a very attractive interest rate, especially in contrast to other fixed accounts and market volatility. But with every upside, there is a downside. And for the I bond, the rate may not be attractive long term, and getting your money into it or out of it may require some patience. Thanks for listening.